Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what company execs are trying to bury in legalese and spreadsheets, and boy do we have a treat today, a deep dive into Whitestone REIT, their quarterly report. It looks like things are certainly never boring in the world of real estate investment trusts. Now before we dive in, if you appreciate getting straight to the point insights from these big corporate filings and want to understand what is really going on with these companies, then make sure you are subscribed and hit that notification bell. We also have a fantastic community over on our Discord server linked right down below in the description where we break down these reports and more so come join the conversation. So Whitestone REIT, their latest filing details their performance up to the 30th of September of last year. And like any financial report, it is a mix of good news concerning trends and a whole lot of numbers. Let's cut through the noise and see what is really happening. First off, let's look at where the company stands financially. Their balance sheet shows total assets of over $1 billion for both September 2025 and the end of 2024. That might sound like a lot, but when you factor in their liabilities, which are also substantial, close to $700 million, it paints a picture of a company that is highly leveraged. Their real estate assets are the core of their business, and as of the 30th of September 2025, these tallied up to about $1.3 billion. However, remember that it is not just the purchase price that matters, it's the depreciation that eats away at the book value of these assets. Accumulated depreciation was over $259 million by September 2025, an important number to keep an eye on for anyone thinking about the long-term value of their properties. Their liabilities are quite significant, and it is important to see how much is coming due. Accounts payable and accrued expenses stood at around $40 million in September 2025, which is pretty consistent with the prior year. They also have notes payable, a much larger chunk of their debt hitting over $641 million. This big number is a key indicator of how much they owe and how much interest they are paying. Looking at the combined total liabilities and equity, it is clear that Whitestone REIT operates with a substantial amount of borrowed money, a common strategy in real estate, but one that comes with its own set of risks. Now let's talk about how the company is actually making and spending money over the periods reported. Total revenues for the third quarter of 2025 were about $41 million, an increase from about $38.6 million in the same quarter of 2024. This growth is good, but we need to see if costs are also growing faster. Operating expenses are a huge part of the picture. Depreciation and amortization alone cost them over $8.3 million in the third quarter of 2025. Add to that operating and maintenance costs, real estate taxes, and general administrative expenses, and you can see how quickly costs pile up. Total operating expenses were around $26.9 million for the third quarter of 2025. One of the most eye-catching numbers here is the loss on extinguishment of debt, a whopping $797,000 in the third quarter of 2025. This means they likely paid off some debt early, possibly to refinance at a better rate, but it still represents a real cost. They also saw gains on the sale of properties, which helped offset some of the other expenses. In the end, after all those revenues and expenses, Whitestone REIT reported a net income attributable to them of about $18.3 million for the third quarter of 2025. This is a solid increase from about $7.6 million in the same period of 2024, showing improved profitability. This improved profitability translates to earnings per S-share. Basic earnings per S-share was 36 cents for the third quarter of 2025, up from 15 cents in the prior year. Diluted earnings per S-share also saw a healthy jump from 15 cents to 35 cents. This is a positive sign for shareholders. Looking at the changes in equity, we see how the company's ownership structure evolved. There were a number of transactions, including repurchases of common shares and share-based compensation, an important part of incentivizing their employees. The company also paid out distributions to its shareholders and partners. For the third quarter of 2025, they distributed 13.5 cents per S-share, a slight increase from 12.38 cents in the same period of 2024. This shows a commitment to returning value to investors. Now let's jump into the notes that accompany these financial statements. They often contain the devil in the details indeed. A significant story in this filing revolves around their investment in Pillarstone OP. It seems Whitestone REIT has been trying to exit this partnership, exercising a redemption notice in January 2024. However, they still have not received the full payment as Pillarstone OP has filed for bankruptcy. Whitestone REIT has filed a claim and believes they will eventually recover more than what their investment was worth on the books. This is a major ongoing saga with potential for significant financial implication. The debt situation is always a critical area to watch. Whitestone REIT has a complex web of fixed and floating rate notes hitting over $646 million before deferred financing costs. They have secured debt on specific properties and unsecured lines of credit. Notably, they secured a new $375 million unsecured credit facility in September 2025, extending their borrowing capacity and maturity dates. This is a massive move that reshapes their financial flexibility. This refinancing and credit facility extension is important because it signals a strategy to deleverage and improve their financial structure, likely to secure better terms and longer runways for their debt. Whitestone REIT actively uses interest rate swaps to manage its exposure to fluctuating interest rates. This is a smart move to lock in costs, especially when borrowing is a big part of their strategy. The report details several of these swaps, with various banks showing a proactive approach to managing financial risks. Looking at the 9-month period ended the 30th of September 2025, net income attributable to Whitestone REIT was about $27 million compared to about $19.5 million in the same period of 2024. This upward trend is definitely encouraging. Now let's talk about FFO funds from operations, a standard metric in the REIT world. It gives a better sense of operational cash flow by adjusting for things like depreciation and gains from property sales. For the 9 months ended the 30th of September 2025, FFO was about $39.5 million, up from about $36 million in the prior year. This metric largely tracks alongside their net income, showing consistent operational performance. Another key metric is NOI property net operating income. For the 9 months ended the 30th of September 2025, Same Street or NOI was about $73.2 million, a solid increase from roughly $70.4 million in the same period of 2024. This shows their core properties are generating more income, which is the bedrock of any real estate business. Their strategy appears to be focused on growth through acquisitions. They completed several property acquisitions in 2025 and 2024, including South Hewland Shopping Centre and San Clemente. These acquisitions show a push to expand their portfolio, aligning with their community-centered property strategy. At the same time, they are actively selling off properties like Sugar Park Plaza and Woodlake Plaza, demonstrating a strategy of portfolio optimization, shedding less strategic assets to focus on better performing ones. No corporate financial report would be complete without a mention of legal matters. Whitestone REIT is involved in several ongoing legal disputes, including those related to their former executives and the whole Pillarstone Ops situation. While they state they do not anticipate material adverse effects, it is something investors must always monitor. So what is our take on Whitestone REIT's latest report? Well, on the positive side, they are showing revenue growth, improved profitability, and a clear strategy of acquiring and optimizing their property portfolio. Their refinancing efforts and new credit facility also suggest a solid grasp on managing their debt. However, the high level of debt remains a persistent risk, and the ongoing issues with Pillarstone Op the bankruptcy and the collection of their redemption claim add a layer of uncertainty. Investor trust and confidence will largely depend on how effectively they navigate these complex legal and financial entanglements whilst continuing to grow their core operations. The increasing distributions are a good signal, but can only be sustained if the operational performance remains strong and the debt remains manageable. Alright, that is our breakdown of Whitestone REIT's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.